My dear students, today let's discuss RTP for CA Foundation on accountancy paper for May 2025. We will see one by one. The first question is, true or false. It based on true or false. State with the reasons. State with the reasons whether the following statements are true or false. Just a minute. The following statements. So you have to mention whether the statement given in the question paper is true or not. Even if it is true or not, you have to justify your answer also. So you have to give the reason. So accounting standard for non-corporate entities is in India. In India are issued by central government. It is true or false? Please tell me. Actually, it is false. As for non-corporate entities, the accounting standard will be issued by Institute of Chartered Accountants of India, ICAI. So answer, the first question answer is false. So actually it is issued by ICAI. It is a correct answer. And then question number 2. Cash book is a subsidiary book as well as a principal book. Cash book means what? It is a subsidiary book. What do you mean by subsidiary book? It is a journal book. Subsidiary book is to be maintained in the case of large organizations. We have to maintain instead of journal book. So cash book, actually what we are doing is, cash book is to be treated as both subsidiary book as well as a principal book, because the cash transaction straight away recorded in the cash book, on the basis of which ledger balances are to be maintained. Ledger account is to be prepared. So the cash book is a subsidiary book as well as it is actually it consists of cash account and bank account. So it is a part of ledger also. So question, cash book is a subsidiary book as well as principal book means it is true. It is a correct answer. True. You have to mention what I have stated. I explained now. You have to mention like this. And then debit balance as cash book is same as overdraft balance. First of all, you should know what is cash book. Cash book is nothing but the receipts and payments. Cash book, it is one of the subsidiary book. It is having two sides, debit side, credit side. Debit side is the receipt side, credit side is the payment side. So here, if the debit side in excess of, exceeding the credit side, that is called favorable balance. If the credit side in excess of debit side, that is a unfavorable balance, that is overdraft balance. Here, the debit balance, that means the excess of debit side and then over credit side, that is a receipt side excess. That is called favorable balance, not a overdraft balance. So it is false. So answer C, false. It is a favorable balance. It is favorable balance. Because debit side is a receipt side is in excess of the credit side, that is the debit balance is given. And then warehouse rent. What is warehouse rent? Warehouse rent means the storage of finished inventory should be included in the cost of the finished inventory. Is it correct? Sometimes you have to pay some godown rent or warehouse rent, whatever it may be, in order to safeguarding the finished goods. So will be these expenses entered in the cost of the finished goods? Is it so? Please tell me. Actually, warehouse, normally the warehousing cost will not be entered, will not be added to the cost of the finished goods. Understand? Finished inventory. In case, some cases, it is necessary. For example, if we say wine, actually wine, when it will be valuable? If the wine is stored for more than 20 years or 40 years, the value will be very much. So, in that case it may be true, but here normally warehouse rent will not be added to the cost of the finished finished inventory. So, this is false. D is false. Unless it is warranted, unless it is required. Only if we, if we store the material for a long period, then only for the purpose of selling, if it is warranted, then it is okay, or otherwise it is false. And then reducing balance method. What is reducing balance method? What are the balances in the depreciation method? cycling method, reducing balancing method, number of digit year method, depletion method. There are so many methods are there. Now reducing balance method means, actually reducing balancing means we have to charge depreciation for 1 year, and then after deducting the depreciation we will charge for the remaining balances. That means what? Actually, if you purchase a new machinery, we are charging more depreciation in the initial years. After some time it is going on declining. So more or less, if the depreciation and repairs and maintenance become more or less uniform throughout the useful life of the assets, so it may be true. So answer E for question number E, it is true. You have to write like that. And then reducing balance method. Promissory note. What is promissory note? Promissory note means if you get any loan from others by writing something. So it is a promissory note means it is a negotiable instrument. So can be made payable to the bearer. No, promissory note, I promise to pay certain amount at the completion of certain period to a certain person or to his order. It is just a format. So the promissory note cannot be made payable to the bearer. Bearer means one who is getting that bearer. Suppose, for example, if I lose my promissory note, if anybody find it out, he will not be the owner. He will not claim that amount like that. So the promissory note cannot be made payable to the bearer. If it is payable, it is payable only to the certain person. Understand? Payable or to the order of certain person. So that it is false. So F is false. So you have to write like that. And then the provision for bad debts is debited to the sundry debtors. Actually, we might have studied about the adjustment entries. For bad debts, you have to, what is adjustment entries? Bad debts account debited to sundry debtors. And then one more transfer entry, P&L account debited to bad debts. But here, provision for bad debts, it is to be debited to the profit and loss account, not to be debited to the sundry debtors. So it is also false. So G also false. And then goodwill. Goodwill means what? It is an intangible asset. Intangible asset means an asset we can touch, we can see. That is intangible asset. Tangible asset means, an asset we cannot see. That is intangible assets. We can touch means the furnitures and building, whatever it is, we can see. That is a tangible asset. Intangible means we cannot touch it. Goodwill, patent, trademark, like that. Intangible assets. Even though if it is intangible assets, it can be measured in monetary terms and it can be measured in physical value. So goodwill cannot be valued is wrong. So G is also false. G, H. H is also false. And then outstanding salaries for the previous year shall be shown as the liability. If it is a current liability, for example, salary, outstanding salary is there. So salary account debit to salary outstanding. If it is a current year. If it is a previous year, it is a liability for the previous year. So it may be, you have to see like that, what shall I say, it shall be disclosed as a current liability to the previous year or opening year, opening balance sheet. So opening balance sheet, it may be mentioned as the current liability in the opening balance sheet, not the current balance sheet. So it is also false. So I is a false. And then a person holding preference shares of a company cannot hold equity shares of the same company. We know very well about the difference between the preference shares and equity shares. Equity shares means he is the original shareholders, original owners of the company. Whereas preference shareholders means that is a preference must be given for giving the dividend to the shareholders. So that is entirely different. But any person can have both shares at a time. So a person cannot hold equity shares, that it is wrong. He can hold at the simultaneously or at the same time both preference shares and equity shares. Understand? So J is also false. J is also false. A person holding preference shares can hold equity shares. Anyone can hold both kinds of shares. A company is not allowed to issue shares at a discount in general, to the public in general. What does it mean? Actually, there is a section number 53 of the Companies Act 2016 and 2013 Companies Act. A company cannot issue shares at a discount according to section 53, except the company can issue the shares at a discount in case of sweat equity shares. Sweat equity shares, you might have read it. Sweat equity shares means the shares for the appreciation of some there's a technical know, etc. It is given by our employee or directors for which to whom we are giving some shares, that is called sweat equity shares. So for sweat equity shares we can issue shares at a discount, but other shares we cannot issue shares at a discount. So it is true. So this question is over. And the next question, theoretical question, under what circumstances can enterprise change its accounting policy? Accounting policy means for inventory there is accounting policy, depreciation is accounting policy, whether you are making depreciation, I mean cyclic method or diminishing method or a digit method, number of digit method, any method like that. So if you pursue one accounting policy, it should be constant, it should be followed consistently. But in some circumstances, some accounting policy can be changed. When? Actually, when? Only if the adoption of the different account policy is required by statute. Actually, we have to change according to the statute. We have to change our accounting policy, then it's okay, we can change it. Or otherwise, in order to comply with accounting standard, and then if the change would result the more appropriate provision, I mean presentation of financial statements when the new accounting policy. Actually, if we follow the new accounting policy, definitely we will be in a position to present our accounting statement and financial statements in a good manner. If it is so, we can change. So, in these three circumstances, we can change our accounting policy as we require. Understand? So, this is the question. So, we change preparation according to the accounting policy. If it is, if we can present financial statements in a relevant manner, in the relevant and appropriate manner. So these are the three circumstances we can change our accounting policy. And then another question, explain the cash and mercantile system of accounting. What is the cash? Any transaction, actually under the cash system, the cash system means it is a system under which a transaction can be recognized only if the payment is received or paid. That's all. So no entry being made when a payment or receipt is due. When it is due, the transaction will not be recognized when it is true. If it is, so the cash transaction will be recognized only if the payment is in receipt of cash or payment of cash. So the cash system, normally who will follow this type of cash system? Chartered accountant, the professionals, educational institutions and non-profit organizations, they are using the cash system. The cash system of accounting. Whereas the mercantile system, what is mercantile system? Mercantile system means it is nothing but the classifying, summarizing the transaction into the assets and liabilities, equities, or whether it is a revenue, whether it is a liability, whether it is a equity or revenue or expenses or income, we have to classify. And then a transaction is to be recognized when the liability is created and impaired and an asset is created or impaired. So, whenever the liability is created or impaired or asset is created or impaired, at the time mercantile system can be used. The record is made irrespective of the fact, actually whether the payment is made or not, it is irrespective of that. So, at that circumstances, we are using that system, the mercantile system. So, it is nothing but generally accepted accounting system. Normally, the business people are doing mercantile system of accounting, they are maintaining. And then, next, this is important. Prepare journal entries for the following transaction in the books of Harpreet. journal entries. You might be knowing the what is the rules, real rule, personal rule, nominal rules, and then equation rule, whatever the rules. So accordingly we do. We will prepare all the journal entries. Prepare the journal entries. First, the customer check for rupees 4,000 returned dishonored for insufficient funds in these accounts. The customer had availed cash discount of rupees 400. So what will be the entry? For example, if any check is honored, what will be the entry? First of all, you should know that entry. Actually, if the check is honored, the normal entry will be bank account debit to customer account. If it is dishonored, the ulta entry, reverse entry will be there. So ulta entry, if at the time of the dishonor, what will be the entry we are making? Customer account debit to bank. Here, customer account or debtor, both are same, debtor's account. So here, discount allowed, already allowed. So discount allowed means it is expenses. We would have shown it as expenses. That also we have to revise it. So the entry will be the same amount. Debtor's account debit, debtors or customer account debit to bank. It is a reverse entry for dishonor. And then in order to cancel the discount allowed. So discount allowed normally debit. Now we have to credit it. Discount allowed. So how much? Normally 4,000 rupees. The amount, check amount, and then discount amount 400 rupees. So the total amount should be debited to debtors account 4,400 rupees. So debtors or customers account debit 4,400, to bank 4,000, to discount allowed 400 rupees. This is the correct. So customer check returned unpaid by bank, cash discount allowed earlier. So this is a narration you have to write like that. And then income tax liability, question number. Income tax liability of a proprietor to rupees 8,500 was paid of petty cash. Whatever the amount drawn from the business, it has to be treated as a drawings. So it is given, if it is taken out of the petty cash. So what will be the journal entry? Drawings account debit to petty cash. That is the correct answer. So drawings account debit to petty cash. This is the correct answer. How much? 8,500. So being the IT of the proprietor paid out of the business, so it is to be treated like that. So that is a narration you have to write like that. And then question 3, defective goods. The defective goods worth rupees 5,000 are sold for rupees 3,000 rupees. Actually, whatever you are selling, the cost price is 5,000. You are selling for only 3,000. So there will be a loss. They debit all expenses and losses. So the losses also should be debited. And then 3,000 rupees coming inside. Debit what comes in? Cash is coming inside. So cash account debit, discount allowed account debit, credit the giver. Who is the giver? Here we have to not mentioning the name. So it is sales account. So if it is a cash sales, cash account debit to sales. Here this is a cash sales, but at the same time we are incurring some loss. So what will be the entry? Cash account debit. How much we receive? 3,000 rupees. Well, actually, what is the cost of the defective goods? 5,000. But we are selling only for 3,000. So there is a loss for 2,000. So 2,000 rupees, it is for P&L account debit. Debit all expenses or losses. 2, sales. Credit what goes out. Sales, that is 5,000 rupees. So what will be the narration? You have to write the defective goods of rupees 5,000 sold for rupees 2,000. That is the correct answer. Sold for rupees 3,000. We are sustaining loss of rupees 2,000. You have to write like that. And then purchase goods from Sunny at the list price of rupees 20,000. He allowed 5% trade discount. Normally trade discount. What is the difference between the trade discount and cash discount? Trade discount at the time of the purchase, old time purchase, either from the wholesalers or manufacturers, we are purchasing some trade discount. That trade discount will not be appearing in the books of accounts. Whereas cash discount means at the time of payment, in order to give some incentive, some deduction will be there. That is cash at the time of payment or receipt. So here, purchase of goods from Sunny of the list price of rupees 20,000, he allowed 5% trade discount, 200 rupees cash discount was also allowed for quick payment simultaneously. Actually, trade discount will not be appearing, but at the same time, 200 rupees pertaining to cash discount, it is allowed for quick payment. So what will be the entry? Normally, purchases. Normally, what will be the entry? Purchases account debit. Normally, purchases account debit. For how much? How far we are purchasing? Actually, 20,000 we are purchasing, but there is 5% trade discount. So 20,000, 5% trade discount means you need not pay. So 1,000 rupees trade discount. So we have to consider only for purchase 20,000 minus 1,000. That is 19,000 rupees for purchase price. So purchases amount rupees 19,000 only. You have to write like that 19,000. But we are paying for how much we are paying? Including cash discount. Cash discount is allowed how much? 200 rupees. So instead of paying 19,000, after deducting the cash discount, you are paying. So to cash or bank. So 19,000 minus how much? 200 rupees. So if you deduct 200 rupees, so 18,800 rupees to cash or bank. Cash or bank, whatever. And then 2, discount received. Discount received is income. Income means according to the nominal account, credit all incomes and gains. So discount received is to be credited. So how much? 200 rupees. So cash purchases, goods purchased from Sunny for 19,000 rupees at 5% trade discount and cash discount of rupees 200 rupees. You have to write like, narrations like that. Next, purchases of goods from Sara Industries of rupees 50,000 plus CGST and SGST at 6%. CGST means goods and service tax. Central goods and service tax and then state goods and service tax. Both actually. The purchase of goods from Sara Industries for rupees 50,000 rupees plus. So we have to calculate what is amount of CGST. 6% means that is 3,000 rupees for CGST and then SGST for 3,000 rupees. You have to write like that. How we have to write? The journal entry will be purchases. Normally purchases. Purchases means it is an expenses. Debit all expenses. So purchase should be debited. Purchases account debit. How much we are purchasing? 50,000 rupees. 50,000 rupees purchases. And then input. Normally the entry will be plus purchase of goods. Input you have to write like that CGST for 50,000 rupees into 6%, that means 3,000 rupees. So 3,000 rupees should be debited and then to input SGST, that is also 3,000 rupees. 2, from whom you purchase, credit the giver. So Sara Limited. Sara, what is his name? Sara. How much? 56,000 rupees. So this is a journal entry. Purchase account. You have to write we have purchased goods from Sara Limited, including CGST and SGST at 6% each. And then next, goods given as a charity. Purchase, if you purchase, the entry will be purchase account debit, input CGST and then input SGST. This is entry. But at the same time, after purchasing, if you are giving for charity, this is the question actually. The goods given as a charity costing rupees 1,600, sales price rupees 2,000, CGST and SGST at 6% was paid at the time of the purchase of the goods. So what will be the entry? It is just a reverse entry. If we purchase, we have to write like that: purchase, input CGST, our input SGST to Sara. So if given for, actually these purchases must be utilized only for the business. Now we are giving as a charity. How much? for 1600 rupees here. So what will be the entry? 1600 rupees, what, how much of amount? I mean, just a minute. 1600 rupees, how much? 6%. 6% means 1600, 6 by 100. So 96 rupees. 96 rupees we would have given for CGST and then SGST also 96, the same amount. So we have to reverse that entry. Normally while we are purchasing, purchase account debit, input CGST debit, and then input SGST debit. Now we have to reverse. So which one should be debited? Charity account. Why? Charity, it is an expenses, it is a loss. Debit all expenses and losses. So charity account debit to purchases. Because purchases, why we are purchasing, crediting the purchase. So decreasing purchasing. We purchased only for the business. Now if we taken out of the purchases, I mean from the business for charity purpose, it will be reduced. So decrease in purchases, decrease in expenses will be credited. So purchases account should be here. Purchases account, how much? How much we purchased? 1600 rupees. And then to input CGST 6%, to input SGST 6%. How much? 96 rupees, 96 rupees. The total amount 1792 rupees. 70 rupees. So 1700 rupees. So the goods given as a charity, input CGST and input SGST debited at the time of the purchases. So now reversed, you have to write like that. So this is a journal entry so far we have seen. And then next we have to see capital or revenue expenditure. Capital expenditure means any expenditures. For example, they classify the following as a capital or revenue expenditure. First of all, you should see the revenue expenditure means the revenue receipts or revenue expenditures, both are only pertaining to the current year. All expenses in the trading and P&L account, all receipts, I mean sales or other income, discount received, income received, like that. So in the credit side of the trading and trading account, P&L account, these are, I mean, revenue expenditures and revenue receipts. So in case of in the balance sheet, whatever the capital expenditures, any expenditures you made from which we are earning, I mean the earning capacity has been increased, that is a capital expenditure. So here we will classify the dividend received from XYZ Limited during the year. Dividend received. Normally dividend means every year we are paying. I mean we are being paid if you are investing in shares of the company. So that is revenue receipt. Though, so answer is this is revenue receipt because it is a revenue nature. First. And the next one is the amount spent for replacement of the period, I mean driven engine by CNG kits. That means what? Actually that is a petrol engine. Now the engine has to be, I mean replaced by CNG, I mean some gas connection like that. So in order to increase that efficiency, if the efficiency increase, actually the cost of expenditures will be reducing. So at that time it will be treated as a capital expenditure. So this is capital expenditure. Next one. And then expenses incurred on the repairs and whitewashing and the first time. If you are incurring every year, that is revenue nature. If you are incurring at the first time, I mean initial time, that is also the capital expenditure. So it is a capital expenditure. And then overhauling expenses of the second hand machine. If you are overhauling, what will be the result? Actually the efficiency, the its capacity has been improved. So overhauling expenses of second hand machine means the production capacity will be increased, so sales will be increased, so earning will be increased. So at that time, that is called overhauling expenses, that is called capital expenditure. And the next one is insurance claim received. Insurance claim received on account of inventory damaged by fire. Actually every year sometimes it may happen, because it is not a capital nature. So it is a revenue receipt, it is to be considered as a revenue receipt. So it is revenue receipt. And then entrance fees of rupees 35,000 rupees received by society club. Entrance fees, actually entrance fees means if you are becoming a member at the initial stage, you will be requested to pay some amount. I mean initially only one time payment, that is called capital receipts. Okay, next one is, from the following information, a draw the trial balance of the books. Actually the trial balance is given, actually it is not a trial balance, summary of transaction is given. You have to classify which side, the debit side and then credit side, you have to classify and then total it. If it is tallied, that is a trial balance. So capital, we know the capital means it is a liability, it will be credit. Discount allowed, debit. Carriage outwards, debit. Return inwards, debit. Rent and taxes, debit. Stock as on 1st April 2023, 1,83,000. This is a opening stock. Opening stocks, debit. Sundry creditors, 84,000. Sundry creditors means it is a liability. So credit. Commission received, credit. Cash at bank, it is a cash mean, it is a debit. Stock, it is a closing stock. Closing stock will not be appearing in the trial balance, it will be given in the adjustment only. So we will not take for preparing the trial balance. And then purchases, debit. Carriage inwards, debit. And then sales, credit. Return outwards. Return outwards means purchase returns. Purchase means debit, purchase return means credit. So return outwards, credit. Plant and machinery, debit. Sundry debtor, debit. Investment, debit. Cash in hand, debit, because it is asset. Motorcycle, it is an asset, debit. If you write like that and then total, it will be automatically, it is total. For example, you can easily prepare, so no need of explaining this one. Okay, the total must be, otherwise we will do it. So debit, credit, trial balance. So capital first, the capital means 9,80,000. And then discount allowed 8,400, it is a debit. And then carriage outwards means 16,100, debit. And then return inward, it is sales return, it is 2,100, debit. And then rent and taxes 8,400, it is debit. So stock, opening stock, how much? 1,08,400, 8,500, it is also debit. And then creditors, sundry creditors 84,000, credit. And then commission received is income, so credit, 12,600. And then cash at bank, how much? 7,700. So stock, closing stock will not be appearing, so leave it. And then purchases 2,52,000. And then carriage outwards 60,900. Actually carriage outwards will be appearing in the profit and loss account. Carriage inwards means trading account, it is not necessary at this stage. So sales account credit 4,20,000 rupees. Return outwards means purchase return, how much? Return was 4,900 purchase return. And then plant and machinery 5,64,900. Plant and machinery. Sundry debtors 1,41,400. Investments, it is an asset, so debited 25,200. Cash in hand, cash 700. So motorcycle, so 2,42,200. So if we tally it must be only 4 items, one more item, 5th item, capital. If we tally, please try to tally it whether it is tallied or not. So total amount 8,400 8,400, 16,000, 2,100, 8,400, 1 lakh, 8,500, 70,000, 700, 2 lakh, 50,000, 60,000, 5 lakh, 64,000, 1 lakh, 41,000, 25,000, 700, 24,000. The total should be 15 lakhs 1,500. Here also 15 lakhs 5,000. 9 lakh 80,000 plus 84,000 plus 12,600 plus 4 lakh 20,000 plus and then 4,900 plus, so 15 lakhs 1,500. So 15 lakh 1,500. So this one is also finished. And then next, rectification of errors. It is very, very important. Please listen. This question is rectification of error. Mathur's trial balance as on 31st March 2024 did not agree. So, trial balance not agreeing. The difference was put to suspense account. During the next trading period, that means next financial year. If it is mentioned like that, next financial year, it is a, rectification after balance sheet. So, it is not after trial balance. It is not before trial balance. It is not after balance sheet. First of all, you have to confirm like that. And then, after balance sheet, if it is after balance sheet, what we will have to prepare? Normally, in case of balance sheet, if it is not tallied, they will do some amount, whether this side or that side, suspense account, like that, and then they are tallying. After the completion of the year, in the next year, they will rectify the mistake committed in the previous year. So, if they rectify, for example, purchases and sales or any expenses or any income, they have to rectify, then it will affect the current year purchase, current year sales, current year expenses, current year incomes. So, we have to insert one more entry. For example, if you have to rectify in purchase account, for example, purchases account 5,000, instead of 5,000 we have written like that 50,000 rupees in the previous year. That means 45,000 we have already entered extra. In the previous year the purchase account was shown 45,000 rupees excess. So this should be cancelled. If we want cancelled, means the purchase account should be credited. If we credited, normally it was debited. Now if it is credited, it will affect the current year trading and profit and loss account. So instead of that, so in order to make accurate, we have to insert one entry, profit and loss adjustment account or period items. So instead of, if suppose purchase is to be credited, you need not credit purchases account. Instead of purchases account, you should credit period items or profit and loss account. So sales account should be debited for a rectification purpose. So sales account should not be debited. Instead of sales account, you have to write like that period items or profit and loss account. That should be debited. Understand? So we will see one by one here. So the first question is, the total of purchase book of one page, rupees 7,165, was carried forward to the next page as rupees 7,615. So what is the difference? Actual purchases is actual purchases, how much? 7,165. But while you are carrying forward to the next page, you have written like that. How much you have written? 7,615. So you have mentioned higher amount. So how much difference you have made it? Actually, for 7,615 minus 7,165, that is a correct amount. So rupees 450. So you have stated extra in purchases account 450. Now we have to rectify it. So the mistake will be only in the suspense account. While preparing the balance sheet, we would have mentioned in suspense account. So now we have to adjust purchases account. But purchases account we cannot correct. Normally, now what we will do actually, suspense after, if it is a after trial balance, then suspense account debit to purchases, because we had already mentioned higher amount. In order to cancel the higher amount 450, we have to credit say purchase account. Normally purchase debited, now it has to be credited. Now we should not do purchases account. Instead of purchases account, I had already told profits and loss adjustment account, profit and loss adjustment account or period account. So the correct entry will be suspense account debit, suspense account debit to P&L, profit and loss adjustment account. So this is the rectification entry. How much that amount? 450. So purchases account over debited, now rectified. You have to write narration like that. Over debited, purchase account over debited, now rectified. So this is a correct entry. And then next, a sale of rupees 281 was entered in the sales books was 821 and posted to the credit of the customer. What is the entry actually? Normally I will shortcut method. I will give sale. Sales. Actually, sales amount is 200. So sales account. Actually, sales account should be credited. Actual amount should be credited like that. Sales account. But we didn't do it. So instead of that, how much sales we have put it? Actually, the sales book as 821. Actual sales 281. But we entered like that 821. So how much excess we mentioned? So 821 minus 281. So 540 rupees. So 540 rupees we are entering in the credit side excess. So it should be cancelled. It should be cancelled means it should be debited. In the sales account it should be debited. That is suspense. It will be in the suspense account. So please understand first. And then one more is the posted to the credit of customer account. Please read the question fully. A sale of rupees 251. Okay. Instead of 251 we have mentioned to 821. So 540 excess. So we are cancelling. But at the same time it was posted to the credit of customer. Please understand. Listen. Credit of customer. Normally if you are making sales, the customer account should be debited. Customer account debit to sales. But here, customer account, how it was affected, the customer account, actually, customer account debit to sales, to sales. How much? 281. In this thing we have to do it. But we didn't do it. Instead of that, customer's account, it was credited. But actually, normally we have to debit the customer account. Customer account debit to sales 281. But we didn't do it. But instead of that, we have mentioned here 821. So we are crediting the customer account. Only in the case of purchases we are crediting. In the case of sales, we have to debit the customer account. So this is a mistake we did it. So it is to be cancelled. So it is to be cancelled means the same amount 821 to be debited. If we debited, it will be cancelled. And then this entry we have to put. So we have to add this also. So the total effect will be 821 plus 281. So 1102 rupees. 1102 rupees should be debited. So what will be the entry means actually sales. So sales, in order to cancel that, what we will do? Actually, instead of sales, we should write like that P&L adjustment account debit. Adjustment debit. How much? 540. So we should not write sales. If we write sales, the current year sales will be affected. If we increase or decrease in sales, that will reflect in the gross profits of the current year. So we have to write like that: P&L adjustment account rupees 540, and then customer account should be debited. So customer account, for how much we have to debit? Customer account 1102 rupees, this amount, and then here this amount 540. So the mistake will be in suspense account, to suspense account. So total 1642 to 1642. This is the answer. So you have to write the narration: the correction of sales account over credited by rupees 540, and the customer was credited by rupees 821 instead of debiting rupees 281. What is given in the question paper, you have to write like that. Now it is rectified. You have to state what it is given actually. After that you have to we have now rectified and strength. Next one, the return to creditor. Return to creditor. Return to creditor means what? Whether it is a purchase return or sales return. First of all, you should understand first. Creditor means seller. Creditor means supplier. So that means purchase. Purchase, if you are returning to the creditor, means that is purchase return. First you should understand the purchase return. So it was entered in return inwards book. Return inwards book means sales return. So by mistake we entered in sales return. Actually it has to be entered in purchase return. So we have to purchase return, we have to enter it. So now we have to enter in purchase return. But in this case, after balance sheet, after trial balance, after the balance sheet. Here the trial balance, after balance sheet. So we have to write P&L 2. P&L adjustment account debit, adjustment 2, not debit 2. Here the debit will be suspense account. Do you understand? Actually 1555 sales return, purchase return, 2 account, just you have to prepare it. Actually return to creditors means this is called purchase return. Purchase return means actually it is to be entered here 15, purchase return 95, and then sales return. Sales return means it is entered in 1595. So purchase return we didn't do it, so we have to do it. And then we have wrongly debited sales return, so it should be cancelled. So 2 credit must be there. So 2 credit means suspense account debit, 2 sales return, 2 purchase return. It is a correct entry if it is after trial balance. So if it is after balance sheet, so it will affect the trading and P&L account. So we have to do the double credit, 1595 plus 1595. So how much amount? These 2 amounts, that is 3190. So suspense account debit to P&L adjustment account 3190. Why we are crediting P&L adjustment account? Please listen. Actually it is a purchase return, but we entered in the sales return. Sales return is a debit side, purchase return is a credit side. Instead of entering in the credit side, we are entering in the debit side. So we have to cancel the debit side. By mistake we have debited. So double side credit must be there. So P&L adjustment account will be 3180. Understand? And then check of rupees 500 issued to suppliers shown as a trade payables toward his dues wrongly debited to the purchases account. Normally here we have to write the purchase correct entry, wrong entry, and then rectification entry. Actually suppliers means that is a creditor. We have issued a check here. The correct entry will be trade payables account debit to bank or cash. Actually what they have done it, a check rupees issued to the suppliers, trade payables, instead of the wrongly debited to purchase account. Instead of that, purchases account debit to bank. So this is a correct entry, this is a wrong entry. So rectification entry means credit side is correct, This is, we have to write the correctly TP account. So the entry will be trade payables account debit to purchases account. It will not be differing in both after trial balance and after balancing. How much amount? 500 rupees, 500 rupees. So payment made to the supplier wrongly credited to the purchases now rectified. This is a correct narration. And then next one is the goods worth rupees 4,400 were dispatched to the customer before the close of the year, but no invoice before the close of the year. No invoice. That means what? Actually, goods dispatched, that means it is already almost sales before the close of the year. Before the close, I mean 31st March to the particular year. But no invoice was made. You have to make an entry. For sale entry, you have to make. So the customer account debit to sales. That is the correct entry. So customer account debit sales means you should not write sales. So customer account debit to sales. But we should not write sales. Instead of that, we have to write P&L adjustment account. So customer account debit to P&L adjustment account. How much amount? 1,400 rupees. So this is, and then one more entry, goods worth rupees 1,600 sent on sale or return basis. The customer entered in the sales books at the close of the year. The customer still had the option to return the goods. Actually, sale or return basis, what does it mean? Actually, sale means if you are, we should, at the initially we have to pass one entry, sales entry. Actually, it is not the original sale, but we have to make sale entry. But after the confirmation from the buyer, whether it is sale, whether it is accepted or whether it is approved, then we will consider sales. Or otherwise, we have to show at the end of the period, I mean before they are confirming, we have to show it as a stock. A stock, I mean inventory on sale or return basis. Here, 1,600 rupees were sent on sale or return basis to a customer. The time is still is there. So what will be the entry? First, it is not a sale. We have to cancel the sale. Cancel the sale means normally party account will be to sales. Now sales account will be to party. Here sales we will do not do it because it will affect the current year. So what will be the first entry? P&L adjustment account debit to customer. So cancelling for first cancellation of entry. Cancellation of sales. And then we have to show this amount as a stock with the customer's account. So how much? Customers, it should be shown only at the cost price. What is? I mean 20% on sales. 20% on sales, I mean this is a sales amount. So 1,600 into 20%, that how much? 320 rupees. So 1,600 into 20% minus, so 1,280 will be the cost price. 1,280 will be the cost price. So this amount should be shown as a inventory account debit to P&L adjustment account. 1,280 because closing stock will be in the trading account credit side. So any changes, any expenses, any incomes in the revenue natures, it has to be changed like that P&L adjustment account. So credit, the P&L adjustment was credited. And then next entry, the sale of goods rupees R for rupees 3,000 was omitted to be recorded. Sale was omitted to be recorded. Then how much sale means? To whom we sold? R. So R account will be to sales, but we do not mention as sales because it will affect the current year. So the entry will be R account debit to, instead of sales, P&L adjustment account. How much? 3,000. One more entry we have to pass. You are required to give journal entries to rectify the errors to show the current year's profits as a loss correctly. So we have to find out one ledger account we have to prepare, that is P&L adjustment account. P&L adjustment account. P&L adjustment, whatever the entries we have made, we have to transfer here, P&L account. The first entry means P&L account, suspense account debit to, P&L adjustment account debit to suspense is to 540, to suspense 540, and then one more entry, suspense by suspense 450, and then you have to see one by one. The first entry will be, we have written it roughly. So one customer account is, to customer account, we had already prepared this one. To customer 1600, and then to buy suspense 3191, and then debtors account, or debtors or customers account 1400, and then inventory 1280, and then by R's account, the last entry, R's account 3000. So this should be transferred to the proprietor's capital account. So what is the difference? Which side is excess? We have to find it out. So credit side is in excess, 450 plus 3190 plus 1400 plus 1280 plus 3000. So 9320 minus 540 minus 1600. So 7180. So to, what is name? Mathur's capital account, to Mathur's capital account. So you have to write one more entry, P&L adjustment account debit to P&L adjustment account debit to Mathur's capital account. So it's to be added in the Mathur's capital account. How much? 7180, 7180. So this question is also over. Please listen. And then next question. This is a bank reconciliation statement. So very, very important, bank reconciliation. Normally we have to reconcile the bank. Why we are reconciling? Because sometimes the balances, the cash book balances will not be coincide with the balance as per the cash book, or both will be differing. So how to prepare the bank reconciliation statement? First of all, just 1 minute. From the following information as on 31/3/2024, prepare bank reconciliation statement after making necessary adjustment in the cash book. The balance is as per cash book, 16,25,000 debit balance. If it is debit balance, means that is a favorable balance. Debit balance means the cash book debit side, that means receipt side in excess of credit side, that is debit balance. We are having abundant of cash in our bank. So that what are the transaction, type of transaction? Checks deposited but not credited. Normally check deposited but not credited will be deducted if it is a favorable balance. First of all, just for your references, for example, if cash book balance is given, cash book balance, favorable balance or debit balance, or cash book balance is given, we have to add some amount. Check issued but not presented, check issued, roughly I am writing, check issued but not presented, we have to add this one. And then any customer, any party directly deposit into our account, then directly deposited by customer, and then dividend or check credited by bank but not entered in the cash book. And then as per standing instruction, standing instruction means we are giving some instruction to the bank, if any amount that we have to receive, please credit our account, receive that amount on our behalf, you have to tell like that. So as per standing instruction, any amount received, that is to be added, standing instruction. And then any bill or check honored. So these are the things to be added if the cash book balance, debit balance is given, favorable balance given. And then less means some transactions are to be deducted. Check deposited but not cleared. Check deposited but not cleared. Check deposited but not cleared. And then next, bank charges. And then bills or check dishonored. And then any payments as per standing instruction, payments. And then any check, bills or check dishonored, bank charges, anything. So these are the things are to be deducted, and then these are the things. It is a general nature. If it is a debit balance is given. Here we will see one by one. So check issued but not presented, normally it is the balance, as mean bank balance is given favorable balance, it is to check issued which is to be added. Check deposited, it is to be deducted. Bank charges, as we seen, bank charges is to be deducted. And the dividend directly collected means, dividend collected, any amount directly collected means it should be added. Insurance premium paid, that is to be deducted. Cash sales wrongly debited. So in this case, we are requested to prepare adjusted cash book. What are the transaction we can adjust in cash book itself, we will adjust. So in this question, so bank balance that appear in the balance. So customer check dishonored and wrong credit given by the bank. So whatever the transaction we can adjust, we will adjust in the adjusted cash book. So first of all, we will prepare cash book, adjusted cash book. Adjusted cash book. What is the balance actually? It is a favorable balance is given. Favorable balance means debit balance to balance B bar D, that is 16,25,000. So check deposited and then check issued, these are the things we will see in the preparation of bank reconciliation statement. These two things we will see later. And then bank charges we will adjust in the cash book itself. So by bank charges, how much? 6,250. And then dividend directly collected, so it is a receipt. So to dividend 62,500. Insurance premium paid, so by insurance premium, it is a payment, we will adjust in cash book itself. So 7,950. And then cash sales wrongly recorded in the bank column. Actually cash book we are maintaining in the case of bank reconciliation statement, bank column we are maintaining, but they are entering, actually this is a cash sales, but we wrongly entered in the bank column. So we have to cancel this. So by cancelling, we have to enter in the payment side. So cash wrongly recorded in the bank column, cash column. Cash we have entered in the cash column, normally it has to be entered in the bank column. So now we have to cancel this. How much? 1,27,500 rupees we have to cancel it. And then one more entry, customer check dishonored by the bank. Customer check dishonored means how much? 65,000. So check dishonored, it will adjusted in the payment side itself, 65,000 rupees. Now these are the things. Wrong credit, this also we will see in the case of wrong credit will be, actually wrong debit means it should be deducted, wrong credit means it should be added if the favorable balance is given. So we will close now cash book and then we will find what will be the balance. So what is the balance? 16,25,000 plus 62,500. So 16,87,500 minus 16,87,500 minus 6,250 minus 7,950 minus 1,27,500 minus 65,000. So balance is 14,80,800. 14,80,800. That means this is the balance, by balance C body carry down. That means what? This also favorable balance, because the debit balance is in excess of the credit balance, so favorable balance. So that's normal. I mean, we are applying, I mean, adding, lessing, we have to add directly. Direct method we can use it. So BRS, we will prepare bank reconciliation statement as on 31/3/2024. So here adjustment column, and then balance as per cash book, I mean favorable balance it is given. So 14 lakhs, what is amount? 14 lakhs 80,800 rupees you have to write, 14 lakhs 80,800 rupees. And then here check deposited but not collected, normally it has to be deducted, so less check deposited but not credited or collected. How much amount? Check deposited 22 lakhs 37,500. This is less, we have to deduct it. And the check issued but not presented, we have to add it. So check issued but not presented. How much check issued but not presented? 17 lakhs 81,000. And then one more entry, the last entry, wrong credit. Wrong credit means if it is wrong credit, it should be added. Wrong debit, it is to be deducted. So wrong credit also added. Wrong credit, how much amount? 75,000. So these two things we have to add, and then this one is deducted. Only one thing deducted. So what will be the answer? So 14 lakhs 80,800 plus 17 lakhs 81,000 plus 75,000 plus, so how much? 33 lakhs 36,800 minus 22 lakhs 37,500. So the amount is 10 lakh 99,300. So 10 lakh 99,300. So this amount is the balance as per passbook. Balance as per passbook, because it is given cash book. From the cash book we have to prepare balance as per passbook. So this one is over. And the next question is, it based on the inventory. Please listen. One more entry we have to pass here for this also, the cash sales. Normally one more entry, cash sales wrongly recorded in the bank column of the cash book. Normally cash sales means the cash account debit to sales. Actually what they have written it, cash bank account debit to sales. By actually this is a correct entry, but they have mentioned it bank account debit to sales, so that it was entered in the bank column. So now we have to make a rectification entry. Rectification entry means actually this is a correct entry. Wrong entry means bank account debit to sales. They have entered like that, account debit to sales. So we have to cancel. Cancel means sales is correct. We have to adjust these two things. So it should be cash account debit. So rectification of entry, cash account debit to bank. This entry we have to pass. How much? 1,27,500. 1,27,500. Okay. And then next we will see, depends upon the valuation of inventories. Valuation of inventories. The closing stock is valued by Zebra Stores on generally accepted accounting principle. Stock taking for the year ended 31st March 2024 was completed by 10th April. The valuation of sold a stock figure of rupees 5,02,500 as a cost of completion date. After the end of the accounting period, till the date of completion stock taking, sales for the next year were made for rupees 20,265. So first of all, every year, normally at the end of every year we are taking stock, we have to make stock taking. So 31st March we have to stock take. But here the stock taking started as on 31st March, but it was completed when it is completed on 10th April. The valuation of at the time, so the balance of stock, the value of stock as on 10th April was rupees 5,02,500. Okay. So after the end of the accounting period, that means after 31st March 2024, the sales for the next year were made to 20,625. That means after stock taking, so it was included as on 31st March. So we should add. So profit margin is 33.33%. I mean 33.33% profit margin. Sales for the next year, and then profit margin is 30% on cost. If it is 33.33% on cost means 25% on sales. So that is the thing we have to be careful about it. So 25%. So this thing to be adjusted, and then one more, the purchases to the next year. Purchases to the next year included in the stock amounting to rupees 27,000 cost less trade discount, that is 10%. So trade discount will not be appearing in the books of accounts. So we have to deduct this amount. So this amount should be also adjusted. And then one more thing, the goods were added to the stock at the markup price of 900 rupees in sales return. And then after stock taking, it was found there were certain very old slow moving items to the cost of rupees 3,375, but which was taken as a cost of rupees 1,575 to ensure disposal to the interested customers. Some customers are interested to take the machine and take the products. So for them we are calculating the lesser amount, that is 1,575. So we are incurring some loss. So that is also to be adjusted. And then due to heavy floods, certain goods costing rupees 4,650 were received from the supplier beyond the delivery date of the customer. As a result, the customer refused to take delivery. Actually, we had already given order for some products in order to make supply to our customers. But during the season, heavy floods, the goods were received. We have received lately, some delay is there. The customer was not interested in taking the goods. So as a result, the customer refused to take delivery, and net realizable value of the goods was estimated to be rupees 3,750. Actual cost is 4,650. Now this one is 3,750. So this is an adjustment we have to make it. So you are required to calculate the value of stock for inclusion in the final accounts. So we have to prepare stock valuation of stock as on date, that is very important, 31st March 2024. So which one? So we have to prepare one statement we have to prepare. Statement of valuation of stock as on date 31st March 2024. So statement of valuation of stock as on 31st March 2024 we have to. Though stock taking was done as on 10th April 2024, the value of stock will be the value of stock as on 10/4/2024 was 5,02,500 rupees. Actually, the stock taking was to be held on 31st March, but actually it was started, but it was completed on 10th of April. But on that date, the value will be 5,02,500. So during the period, some transaction was happened. So these adjustments are to be made in order to find out the value, as on 31st March 2024. So what are the adjustments we have to do? First of all, the cost of sales after 31st March 2024. up to 10th April. How much for which we sold? How much we sold? 20,625. So that is a cost price. How much we have to deduct? Actually the cost value must be deducted in order to find out the value as on 31st March. So we have to add cost of sales after 31st March till stock taking. Stock taking means till 10/4/24. How much value? 20,625 less, that is 25% on cost. Here 33% on cost. So we have to take 25% on sales. This is a sales price. So how much we have to add? 20,625 into 25% minus, so 15,469. 15,469 should be added. And then another entry, we purchased for the next year also, it was included, it has to be deducted. So we have to deduct, after deducting the trade discount also, the purchases for next year. How much we purchased? 27,000, in which 10% trade discount was allowed. We have to deduct it, trade discount. So 27,000 into 10% minus, so how much? 24,300 rupees we have to deduct it. And then cost of sales return, that is also selling price, 900 rupees, for which the cost price less cost of sales return. We have to find out cost sales return. Sales return, sales value, how much? 900 rupees sales return, sales value. We have to deduct 25% on cost, sales price we have to do. So 900 into 25% minus 675 we have to deduct it. And then one more item, revaluation of slow moving items. What is the loss we are incurring? That is also we have to deduct in order to find out the value as on 31st March. So loss on revaluation of slow moving goods. How much? 3,375. Actually, how much it's valued? 1,575. What is the actual loss? 3,375 minus 1,575, that is 1,800 rupees. It has to be deducted. And then one more item we have to deduct, loss due to default. Please listen, how much? Actually, due to heavy floods, certain goods costing rupees 4,650 were received from the supplier beyond the delivery date, so that the customer refused to take delivery. Net realizable value of the goods was estimated to 3,750. Actual value this one, and then this value, net value, realizable value. So the loss will be 4,650 minus 3,750. So 4,650 minus 3,750. So 900 rupees to be deducted. So if you are adjusting these figures, we will find out the balance, value of stock as on 31st March 2024. So what is the value? So the first one is 5,02,500 minus 15,406, plus 5,02,500 plus 15,469, and then minus 24,300 minus 675 minus 1,800 minus 900. So the balance 4,90,294. 4,90,294 rupees. This amount is the value of stock as on. So stock value as on 31st March 2024. So this question is over. And then another question. It is also important question based on the depreciation. Depreciation. The machinery account of a factory showed a balance of rupees 95 lakhs on 1st April 2023. So the balance, opening balance is given 95 lakhs as on 1st April 2023. The books of accounts of the factory has closed on 31st March. So financial year ending 31st March. Every year the depreciation rate of depreciation is 10% per annum is charged under the diminishing WDV. So WDV method we have to maintain. So on 1st September 2023. So opening balance is given 1/4/2023. The same year. So April means April, May, June, July, August, September. So after 5 months, on 1st September, a new machine was acquired at a cost of rupees 14 lakhs. And then 44,600 was incurred on the same day as installation charges. So total expenditure is 14 lakhs plus 44,600. So 14 lakhs 44,600 for another machine cost we have spent on 1st September 2023. We have to show in the same year. On 1st September, the same date, a machine, you should be very careful here, a machine which had a cost of rupees 21 lakhs 87,000 on 1st April 2021, that is before 2 years, 2.5 years. So 2 years, 21-22, 22-23, 23-24, we are 23-24. So it was sold for rupees 3,75,000 rupees. And then another machine which had a cost of rupees 21 lakhs 85,000 on 1st April 2022, scrapped on, but it was not sold, it was scrapped. We have shown as a total liability, loss. So it has to be written off in the profit and loss account. So this is a total loss. Prepare, but how much loss we have to find out. Here also how much loss we have to find out. These are old machines. So we have to calculate including the depreciations, everything, and then how much it has been sold and what is whether there is a profit or loss, we have to find it out. So prepare machinery account for the year ended 31st March 2024, allow the same rate of depreciation as in the past and calculate depreciation to the nearest multiple of rupees. So this is also important question, please see. First we have to prepare machinery account, plant and machinery. So we have to prepare, they are asking for plant and machinery for the year ended 31st March 2024. We have to prepare this one. Next one. So first on 1st April 2023, the books of accounts showed a balance. So opening balance we have to mention. So to balance brought down how much? 95 lakhs. And then this after 5 months, 1st September, here this date is 1/4/23, here 1/9/23, additional machine purchased to bank. Additional machine purchased, actual cost 14 lakhs plus 44,600. 14 lakhs, this is lakhs. So we have to write correctly. So 14 lakhs, 44,600, 14 lakhs plus 44,600. So purchases on 1st September, the same year, on 1st September, September 22. We sold one machine that cost is, please careful, a machine which had cost 21,87,000. This amount. So we have to find out as on date what is the value, what is the book value as on date of sale, and how much for we sold it, and then what is the profit or loss we have to find out. So working note number 1, note 1, we have to find out the depreciation and all. The machine cost as on 1/4/2021, how much? 21,87,000. So less depreciation. Depreciation how much? 10%. 10% means how much? 10% 21,87,000 into 10% means 2,18,700. 2,18,700. It is for next first year. So after deducting the opening balance, that is 19,68,300. This is balance as on 1/4/2022. So once again we have to provide depreciation for the next year. So less depreciation 10%. So 10% depreciation will be 1,96,000, 1,96,830. So if we deduct how much the value, so 17,71,000, 17,71,470, and then depreciation we have to provide up to September, because now 22-23, now 23 September. So it is a balance as on 1/4/23, 2023 opening balance. So we are selling it on 1st September. So up to depreciation, depreciation up to 1st September. September means for how many months? April, May, June, July, August, 5 months. 5 months we have to prepare. So 17,71,470 into 10% divided by 12 into 5. So depreciation 73,811. 73,811. This is a depreciation. So book value on the date of sale will be how much? That is called 16 lakhs, 17 lakhs 71,470 minus 73,811. So 16 lakhs 97,000, 16 lakhs 97,659. This is a book value. So this machine we have sold it. Book value as on date 23. We sold it for less. How much we sold for? Sold value how much? For 3,75,000 rupees we sold. So what is the loss? Minus 3,50,000 means, so total loss 13 lakhs means 16 lakhs 97,659 minus 3 lakhs 75,000. So 13 lakhs 22,659. So it is loss, P&L account. So it has to be appear in the profit and loss account. And then depreciation as on date, up to date of sale, it has to be 73,811. For how much we sold, that is 3,75,000, it is to be also credited. So these are the things we have to write in the credit side of the machinery account. So by bank, sale process, how much? 3,75,000. And then depreciation you have to mention by like that. By depreciation up to 1st September, how much? 73,811. And then loss on profit and loss account, how much? 18 lakhs. That is loss 13 lakhs 22,650. So 13 lakhs 22,659. And then one more machine, another machine which had cost of rupees 21,85,000 on 1st April. So 2 years we have to prepare depreciation, we have to calculate, and then it was scrapped. So it is to be total amount will be shown as a loss. So how much amount it is to be? First we have to prepare. So note number 2. So value as on second machine, value as on 1/4/22, how much? 21,85,000. Depreciation less depreciation for 1 year at 10%, that is 2,18,500 rupees. If we deduct 19,66,000, we had already prepared, and then next less depreciation for it. This is the balance as on 1/4/2023. So for 5 months we have to prepare at the date 1/4. So depreciation for 5 months, how much? 19,66,500 into 10% divided by 12 into 5, so 81,938. So this depreciation. So minus, if we deduct it, what is the value? 18,84,562. So it is actually scrapped. So total loss. So this amount we have to be entered in the credit side of the machinery account. So another P&L account, that is loss, scrapped second machine. What is the cost? 18,84,562. And then depreciation we have to provide. How much depreciation we have to provide? What is the opening balance on 1/4? Actually the opening balance, that is 95 lakhs opening balance. From this we have to find out. So from this we have to prepare, note 3. Note 3, opening balance, opening balance 1/4/23, that is amount 98 lakhs. We have to deduct the balance of the machinery sold, the value as on 1/4/2023, we have to deduct that amount. So written down value of machine, first machine, how much? That is 17 lakhs. This amount we have to take into account, 17 lakhs 71. This is the balance as on 1/4/2023. This is the thing we have to deduct it. So 17 lakhs 71,470, because it is sold out on September itself. After 5 months it is sold out. Opening balance was there, but now it is sold out. And then less another machine, it was scrapped out. That means scrapped, written down value of second machine, how much? That is 19 lakhs. This amount we have to take, 19,66,500. If we deduct these two amount, so that is the value as on 1/4/2023, for which you have to provide depreciation for whole year. So 95 lakhs minus 17,71,470 minus 19,66,500. So the value 57,62,030 rupees. This is the balance as on 1/4/23, for which we have to prepare depreciation for whole year. So depreciation on this amount, rupees 57,62,030 at 10%. So value is 5,76,203. And then another machine we purchased on 1st September. So for which September means 5 months over. So 7 months we have to prepare, we have to calculate depreciation up to 31st March. So depreciation 14,44,600 rupees cost. So at 10% for 7 months. 7 months means actually September we purchased. September, October, November, December, January, February, March. 7 months. If we calculate, so 14,44,600 into 10% divided by 12 into 7. So 84,268. 84,268. So if we minus the value, how much actually total we have to add these two, if we add these two, so entry 6,60,471. So is the total depreciation. So depreciation we have to provide for second machine and then old machine balance. So depreciation, so 81,938 one amount, and then depreciation 6,60,471. So balance how much? So the closing balance we have to find out. So 95 lakhs plus 14,44,600, the value 1,09,44,600, 1,09,44,600 minus 3,75,000, 73,800, 13 lakhs, 22,000, 18 lakhs, 81,000. So amount will be 65,46,159. So the balance by balance carry down. So it is a value of the machine as on 31st March 2024. Understand? So this sum is also over. And then question number 8. On October 24, Samar sells goods to Amar rupees 25,000 plus IGST 18%, draws two bills of exchange on him. The first bill for rupees 15,000 for 2 months. So first bill for 2 months, second bill for 3 months. So 2 bills. Understand? And then the Amar accepts and returns these bills to Samar. Both bills are sent bank for collection on 1st October 2024. In due course, Samar receives the information from the bank on the due date of the respective bill. The bill for rupees 15,000 has been duly met. The other bill has been dishonored. The noting charge is paid on the dishonor bill of rupees 500. Past journal entries, very simple. So we have to write. Actually, bills receivable means it is a promissory, just like a promissory note, it is a negotiable instrument. While we are making credit sale, we have to enter first the sale entry. After that, we are getting some security purpose, we have some bill. So, bills receivable account debit to the party. We have to receive the bills receivable. So, here the journal entries in the books of Samar, we have to prepare some journal entries in the books of first day on October 24. So October 1, 2024, we made a sale. The Samar sells goods to Amar. So Amar's account debit to sales. So at the time, IGST also there. Integrated goods and service taxes is 18%, for which we have to calculate. So what is the journal entry? Debit the receiver, Amar account debit, Amar account How much? Amar account debit. The sale amount is 25,000. Two sales. 25,000. To output IGST. For 25,000, how much percentage? 18%. 18% means that is 4,500. So 4,500. So Amar account should be debited the total amount. So 29,400 rupees. So being inter-sale of goods to Amar at IGST 18%, the narration you have to write like that. And then October 1, 2024, Amar accepts and return these bills. Actually, draws two bills. The first bill is for 15,000, and then first bill is for 2 months, second bill is for 3 months. First bill 15,000, and then remaining bill means how much? How much? That is 15,000 out of 29,500 minus 15,000. So remaining bill 14,500. So two bills we are receiving from him. The first bill, so October 1, bills receivable account number 1. How much? 15,000. And then bills receivable 2 account 14,500, because 29,000 rupees is a sale value. To Amar, credit the giver. To Amar. So 29,500. So two bill accepted by him. So it is a narration, you have to write it. But the same date, October, it sent for collection. And then bills, October 1, it was sent for collection. That means bill sent for collection, account debit, sent for collection, account debit. For how much? 29,500 to bills receivable number 1, and then to bills receivable number 2. So for 15,000, 14,500 rupees. October 2. And then October, the first bill how much? 15,000, second bill 14,500. So the first bill was honored. First bill for how much? October, November, December. So the due date now November 1, grace days 3 days. So December 4 is the date. So at the date it was cleared, honored. So honor entry, bank account debit to bill sent for collection. Bill sent for collection. How much? 15,000. And then second bill means next month the same date, 4th date. About Jan 4 is the due date. So Amar account, actually it was dishonored. Dishonored means there is a noting charges. If it is dishonored, some notary public will be given authorization. They have to write some statement. For what reason it has been dishonored, they have to write as in notary public, for which they are charging some minimum amount, that is called noting charges. That charges, it is paid by the bank. So the entry will be, actually while we are receiving the correct entry, bills receivable account debit to Amar. If it is dishonored, Amar account debit to bills receivable. So here bill sent for collection. So we have to use bill sent for collection. Amar account debit to bill sent for collection. And then noting charges, it was given by the bank, credit the giver. So to bank, noting charges 500 rupees it is given. Actually bank bear this amount, and then bill sent for collection 14,500. Next second bill face value is 14,500. So the total amount will be 15,000 rupees. So second bill dishonored and bank paid rupees 500 rupees as a noting charges. So this question is also over. And then question number final accounts. It based on the final accounts. Please listen. Charu decided to start a business of fashion garments under the name of Mr. Vellore on 1st April 2023. She had a saving account, actually rupees 10 lakhs. She invested rupees 3 lakhs out of 10 lakhs. Actually, saving amount, he mobilized his saving. From the saving, he started one business, invested in the business rupees 3 lakhs out of his savings. Apart from that, he borrowed some equal amount, I mean the same 3 lakhs rupees. Here, the same 3 lakhs rupees he borrowed from bank. She purchased a commercial space for rupees 5 lakhs. It is a fixed asset. It should be appearing in the balance sheet, asset side. Further spent rupees 1 lakh for renovation to make ready for business. So how much totally he spent? 6 lakhs rupees. It is an asset. I mean building expenses. And then loan. How much loan he has borrowed? 3 lakhs rupees. For loan, the interest repaid, loan and principal repaid by him on 30th June 2023, 15,000 rupees as principal, 9,000 rupees interest. 30th September 2023, 15,000 principal. So equal installments every month. I mean every month, not in the month. June, July, August, September, once in 3 months a repayment schedule, and then along with the interest also he is paying. In view of further capital requirements, he transferred 2 lakh rupees from his saving bank account. So additional capital, that is 2 lakhs. Formerly he has invested 3 lakhs. Now 2 lakhs. So total 5 lakhs additional capital. She paid security deposit of 7,000 for telephone connection. So it is an advance. So it will be in the asset side balance sheet. And then one more item, furniture also, it is an asset. If it is depreciation is mentioned, we have to prepare depreciation also. So for 10,000 rupees he purchased for furniture. All payments made by check and receipts in cash were deposited in bank account. At the end of the year, his business showed the following results: the total sales, total purchases, and then electricity expenses, cartage, so entertainment expenses, miscellaneous expenses, telephone expenses, traveling expenses, maintenance expenses, electric expenses payable, that is outstanding. So already paid, electric expenses paid, this is 40,000. Still we have to pay, that is adjustment 20,000 rupees. So outstanding electricity, it has to be appeared in the liability side. So outstanding, it should be added in the profit and loss account also. Other information, she withdrew rupees 5,000 by check each month for her personal expenses. That is to be shown as a drawings. So it should be deducted from the capital account. And then depreciation on building 5%, furniture 10%. So 10,000 rupees furniture 10%, building some amount, 2 amount actually. Building how much? Actually building 5 lakhs and then 1 lakh, 6 lakhs rupees purchased. So out of that, depreciation is 5%. Closing stock is 5,50,000, trading account credit side and balance sheet asset side both. So prepare trading account and profit and loss account for the year ended 31st March and balance sheet as on the date. So we will prepare. The question is very simple, very easy also. So here we have to prepare in the books of, actually in the books of, we have to write like that in the books of any company name or proprietor name, whatever name it is given in the question paper, we have to write like that. So in the books of Vellore Designers Limited, so in the books of Vellore, so trading and P&L account, trading and profit and loss account for the year ended 31st March 24. So this is a trading account we have to prepare. First trading P&L account. First, what is given actually, trading account prepare, purchases is given. Here purchases, so opening stock is not given. So purchases, 2 purchases. 17 lakhs. And then direct expenses is not given. Telephone charges, P&L, traveling P&L, maintenance P&L, electricity P&L, miscellaneous P&L, everything is P&L. So cartage outwards, if it is inwards it will be in the trading account, outwards, so it is not coming. Electricity expenses, okay, this is also some adjustment is there. So 2 purchases by sales. How much sales? So purchases is given, sales 20 lakhs. So 20 lakhs sales. And then closing stock is there here, 5,50,000 rupees by closing stock, 5,50,000. 2 purchases. No other item is given in respect of trading account, so we will close it. So if we close 25,50,000 credit side, 25,50,000 25,50,000. So here's a purchases, 17 lakhs already was there, 17 lakhs. If we deduct, so 25,50,000 minus 17 lakhs, so 8,50,000 rupees, 8,50,000 rupees GP. So the same GP here by gross profit, 8,50,000. We will write here because space is not sufficient. There are so many entries. So by GP 8,50,000 to interest. How to prepare interest? Interest here, the loan and interest repaid by her in the first year. So interest 9,000, one interest, first installment, second installment, third, 4 quarter interest. So 9,000. We have to add 9,000 plus 8,550 plus 8,100 plus 7,650. So these are the interests paid during the year. How much that amount? I had already calculated, 33,300 rupees interest. And then any other expenditures given here. And then here we will see in the box what is the telephone charges. 2 telephone charges, 2 telephone 50,000 rupees. Traveling 45,000. Maintenance 25,000. And then maintenance, electricity payable. So you have to write, actually paid 40,000. So electricity paid 40,000. Add outstanding 20,000. So 60,000 rupees I have to add. And then to miscellaneous, this amount to miscellaneous 15,000. And then entertainment expenses, entertainment 5,000. Carriage outwards 60,000. So and then depreciation on building and then furniture. To depreciation on building, how much? 6 lakhs, 5%. So 6 lakhs the machinery cost into 5%, that means 30,000 rupees depreciation. And then furniture, the total value is only 10,000 rupees, on which 10%, so 1,000 rupees. So if we balance this amount, we will find out the net profit. So close the balance. So all the items have been entered, please check it out. 45,000, 25,000, 60,000, 15, 5, 60, 30. So 8 lakh 50 minus 33,300 minus 50,000 minus 45,000 minus 25,000 minus 60,000 minus 15,000 minus 5,000 minus 60,000 minus 30,000 minus 1,000. So 5,27,500. So 5,25,700. This balance is total, same balance. 8,50,000. 8,50,000. So net profit transfer to capital account. So this amount, please. Let's prepare balance sheet. Before preparing the balance sheet, we have to prepare one bank account, because bank closing balance is not given. Anyhow, we will prepare. We have to just adjust whatever the expenditure made, what the receipts we have, what are the amounts we are in receipt. So we have to calculate like that. And then balance sheet. We will prepare balance sheet first. Balance sheet as 31/3/2024. Balance sheet. So what is the capital given? Capital out of his saving, he has introduced 3 lakhs as a capital first, and then further 2 lakhs capital. We have seen it. 3 lakhs, here see, 3 lakhs rupees capital, and then 2 lakhs rupees. So 3 to 5 lakhs. So capital, balance sheet, it is a liability side, 3 lakhs, add additional 2 lakhs. So total 5 lakhs. And then drawings is there. Drawings, how much is drawings? I mean, withdrew 5,000 rupees by check each month for his personal expenditure. So 5,000 into 12, so 60,000 rupees drawings. We have to deduct drawings. And then add net profit. Net profit, how much we calculated? Net profit, we find out 5,25,700. So 5,25,700. So 5 lakh, so 4,60,000 plus, so 5 lakhs plus, minus 60 lakhs plus 5,25,700. So the capital account balance, closing balance 9,65,700. And then bank loan is there. Bank loan, how much 3 lakhs we borrowed. Out of that we repaid. 4 quarter repayment we have done it. So 15 lakhs, 15,000, 4 installment we have paid. So 15,000 into 4 we already paid. So 60,000 rupees we paid. So the closing bank balance will be 2,40,000. And then other outstanding expenses on electrical expenditures. I mean, how much that expenditures? 20,000 payable, outstanding. So outstanding electricity expenses, so 20,000. So this is a credit side, I mean liability side. This is liability. Then assets, building, one building is there, 6 lakhs building, for which you had already charged depreciation, less depreciation 5%, that is 30,000. So 30,000 means 5,70,000. And then furniture 10,000 rupees, less depreciation, that is 1,000 rupees 10%. So 9,000 rupees after depreciation its value. And the security deposit we had made it, that amount rupees 7,000 rupees. And then closing stock, that is 5,50,000. One more item, bank balance is not given. For that we have to prepare bank account. So after bank account preparing, we will complete, tally balance sheet. So the bank account, how we have to prepare bank account, what is the opening balance, and then how much capital he has introduced, and then how much borrowed. So everything should be written. So to capital, so cash account debit to capital, that is 3 lakhs rupees he brought in. And then apart from that, additional capital he brought in 2 lakhs. So this is a receipt. And then bank loan we borrowed. Bank loan how much? That is 3 lakhs. And then sales amount, that is also a receipt, 20 lakhs. So these are only the receipt. Apart from that, we had constructed one building. So by building, how much we spend? By building, that is 6 lakhs we spend. Furniture, how much we spend? Not by, furniture 10,000. And then bank loan repaid. How much repaid? 15,000 into 4, 60,000 rupees we paid. And then interest, how much? The 3 installments interest, how much we shown here? 33,300. So interest 33,300. So interest. And then security deposit for 7,000 rupees. And then drawings 5,000 into 12, 60,000 rupees the proprietor drawn. And then purchases made, how much purchases? That is 17 lakhs. So 17 lakhs purchases. And then telephone expenses, how much spent? Telephone expenses 50,000 rupees. And then traveling expenses, that is 45,000. And then maintenance 25,000. And then entertainment, that is 5,000. And then electricity 40,000. And then carriage outwards 60,000. And then miscellaneous 15,000. So if we have spent this much of expenses, we have spent, this is a receipt. So if we balance, what will be the closing balance of? So here 20, 23, 25, 28 lakhs. 28 lakhs. 28 lakhs. If we deduct these things, I had already calculated, that is 89,700 rupees. So the closing balance, by balance, carry down 89,700. So it should be shown in the balance sheet, debit side, asset side, that is bank, 89,700. Now if we tally, it must be tallied, please check it out. So how much? 9,65,700 plus 2,40,000 plus 20,000. So 12,25,700, 12,25,700. Here also 5,75,000 plus 9,000 plus 7,000 plus 5,50,000 plus 89,700. So the same amount, 12,25,000. How much? 5,75,000, 9,000, 7,000, 89,000, 5,50,000, 89,000, 7,000. So this amount is 5,70,000, not 75. So 5,70,000 plus 9,000 plus 7,000 plus 5,50,000 plus 89,700. So 12,25,700. So 12,25,700. So it is tallied. And then one more question is, financial statements for non-profit organizations. From the following receipts and payments account, from the receipts and payments account, I see actually given opening cash and then cash at bank, subscription. It is received 22 lakhs 86,000, donation 10 lakhs 80,000, interest on investment 27,000, entrance fees 2 lakhs 70,000, interest received 97,400, sale of old newspapers 13,500. So salaries 7 lakhs 42,500, stationery, and then billiards table, which is an asset, investments asset, miscellaneous expenses 1,12,500, furniture 18,45,000, insurance premium 40,500, cash in hand, that is a closing cash and then closing bank. So it is total balance tallied. Our subscription arrears for the year ended 31st March 2024, that is 2,02,500 rupees. If it is subscription arrear for the year ended, I mean it is pertaining to the current year, so we have to add it. Subscription received in advance during the same year, that means it is a liability, so it should be shown it is a liability sale. It has to be deducted. So subscription received in advance. And then insurance premium prepaid rupees 4,500 rupees. If it is prepaid, any expenses prepaid, we have to deduct in the income and expenditure account, and then it has to be shown in the balance sheet asset side. And then details of with respect to stationery accounts club. So stock of stationery is given 7,500, 45,000. Creditors for stationery 39,000, 60,000. Advance paid to stationery 10,000. Prepare, very simple. This question is also, don't worry about it. Prepare income and expenditure account for the year ended 31st March 2024. As per the club rules, the donations are to be capitalized, the entrance fees to be. So the donation to be capitalized means it's to be appeared in the balance sheet itself. And the entrance fees, it is an income, so it has to be entered in the income side of income and expenditure account. So prepare income and expenditure account. We are requested to prepare income and expenditure, not the balance sheet. So we will prepare this one also. So here, first of all, we have to prepare what is the stationery value, and then what is given actually. If anything given in the box with opening and closing balance, some adjustments are to be made. Here the stock of stationery is given, the opening stock and then closing stock. At the same time, the creditors of stationery is also given, the opening creditors and then closing creditors. Some amount we have paid according to the receipts and payments account. For stationery we paid for rupees 1,34,500 like that. So we have to make adjustment after entering the opening closing balance and how much actually we purchased, how much actually we paid. So first of all, let's prepare the creditors account. So creditors account first we prepare, and then one more item, stationery stock account we will prepare. So creditors account, creditors for stationery account, and then next stationery account. So creditors, actually opening balance is given. Actually creditor is a liability, opening balance will appear in the credit side. So by balance B bar D carried down, that is how much? 39,000 rupees opening balance. And then closing balance is also given 60,000 rupees. So we will enter to balance C bar D. Understand? And then one more thing, stock of stationery. That is also given opening balance. It is asset, so you have to opening balance right in the debit side. To balance brought down how much? 7,500 rupees. And then closing by balance C body 45,000 rupees. So how much we should show in the stationery account, I mean income and expenditure account, how much we used for stationery, we have to find out. At that time, we have to find out what is the purchase. Any payment made to the creditors, we will check it up, receipts and payments account. So stationery, that means the payment made for stationery, that means we would have paid only to the creditors. So to bank, how much? 1,34,550. Understand? And then any amount we have paid, that is 10,000 advance paid for stationery, that is 10,500 rupees. Advance paid means advance it is an asset. So for us advance we paid by advance account debit to creditors. Let's pay, we had paid, so this 10,500 rupees. So for creditors during the year we paid 1,34,550. Apart from that we made 10,500 rupees advance is there. Opening balance and closing balance, we adjust this account. We will find out what is the stock, what is the purchase. Actually only from the creditor we purchase. So what will be the balance? So 1,34,550 plus 60,000. So 1,94,550. 1,94,550 minus 39,000 minus 10,500. This amount supposed to be how much? 1,45,050. 1,45,050. That is by stock of stationery, that is a balancing figure. It is supposed to be in how much? By purchases account, by purchases or stock, anything. So here this amount 14, how much? Stationery account. Here this amount should be transferred to the stationery account to creditors account. How much? That means our purchases. Opening balance purchases and then closing balance purchases, add stationery purchases. So purchases how much? 1,45,050. 1,45,050. So opening stationery 7,500, purchases 1,45,050. So the total amount 1,52,550. So out of that the closing balance, if we deduct the total amount we are consuming, so it should be the expenditures. It should be shown in the income and expenditure account. So 1,52,550 minus 45,000. So minus 45,000, that means 1,07,550. This is by income and expenditure account. So in the income and expenditure account debit side we have to state like that. To stationery this much amount, this is expenses. Now we will prepare, let's prepare income and expenditure account. Income and expenditure account for the year ended 31st March 2024. So first, what are the expenditures actually? First, expenses side. Salaries, 2 salaries, 7,42,500 we will take up. 7,42,500. 2 stationery. 2 stationery we have find out. 2 stationery consumed. Stationery consumed. How much according to the stationery account? We will find out that amount. Here. Stationery account 1,07,550. So 1,07,550. And then miscellaneous expenses. How much? Miscellaneous expenses. that is 1,12,500. And then insurance premium, there is prepaid also there, premium. Actually 40,500 less prepaid. So 4,500. So 36,000 amount. So these are the thing as an expenses. Income side by subscription. Subscription how much? Actually subscription 22,86,000. Actually 22,86,000. So some adjustment is there. Subscription in arrears for the year. That means still we have to receive. So it is pertaining to the current year. It has to be added. So added. So arrears. So arrears should be added. How much? 2,02,500. And then received in advance. For the next year we received advance. So received in advance, we have to deduct it. How much? 58,500. 58,500 we have to deduct. So the value will be 22,86,000. 22,86,000 plus 2,02,500 minus 58,500. That is 24 lakhs. 22,86,000 plus 2,02,500 minus 58,500. That is 24,30,000. So 24,30,000. And then one more item, entrance fees. Here what they mention, actually donations or capitalized. Entrance fees is the income. So by entrance fees. Entrance fees. How much entrance fees? 2,70,000. This amount 2,70,000. And then interest on investments. Interest on investments. That amount is 27,000. And then interest from bank. That is 94,500. The sum is simple. And sale of old newspapers, all are receipts. Sale of old newspapers, that is 13,500. So that's all. So 13,500. Sale of old newspaper, interest from bank, and then interest on investment, entrance fees. Entrance fees 2,70,000 actually. 2,70,000, okay, entrance fees, entrance investment. That's all. So we have to add to 28,35,000. 28,35,000. So if we balance, that amount will be 18,36,450. So to surplus. So this question is also over.